Sandra, thank you so much for coming on episode number 3 of Ask a Loan Officer. Introduce yourself to the people and let's get started.
Hi, everybody. My name is Sadra Rivera. I am with Champions Mortgage, and I have been in the mortgage industry for close to about 20 years now.
20 years, that in itself says a lot that you have a lot of experience to help your buyers to make sure you can either tell them they need more work or they can get the deal done. So I love to hear that, and the people can appreciate that as well, that type of seasoning and confidence in a loan officer.
Yeah, definitely. We do try to keep up with everything. There's just like anything else, there's always stuff that's changing. So, we always try to stay on top of the new programs, especially, for everybody. Everybody has a
Absolutely.
different situation.
Absolutely. I know we've been trying to connect since December almost, but you've been working, I've been working, the market's been changing. We
Yes.
finally have a chance to get together now. I want to thank you again for coming on. Now, I asked you specifically, what's a good program we could talk about? And you mentioned the DSCR program. That's the Debt Service Coverage Ratio program. That's for investors. Tell the people about that so we get some information and hopefully get some people who are interested in using this program.
Yes, so the DSCR program, like you mentioned, is the debt service coverage ratio, which is a great program for investors. A lot of people that are concerned that they might not be able to qualify for an investment property. They want to get their hands or they want to get started, investing into real estate. With the DSCR program, there's no income requirements. So that's the great part about it, especially for people that are self-employed. We do not have to worry about trying to show any type of income. They are basically qualified rather using the prospective rental income that the property can generate.
Wow. Just so we have this clear as we let the people know that are watching this video, you're saying there's no qualifying documents that are needed except for the rental income from the property?
Yes, when it comes down to the income, yes, we don't need to worry about, whether the borrowers are going to qualify with the current income that they're reporting or that they're making.
That means no paycheck stubs, no W-2s, no tax returns, none of
Yes.
that?
Yes, and it does save a lot of time, and it could, it can be a hassle sometimes, especially for those people that are self-employed.
Okay. Now, what is considered an investment property? Is that a second home? If I already have one, is that the first time buying one? What are the program requirements for investment property?
So an investment property is, it's an investment. You're going to be renting it out. You're not going to be living on it. So that's why, they use the prospective rental income or the income that it's going to generate to help you to qualify.
Okay, so let's say hypothetically, I'm going to get $5,000 in rent of this for this particular property I want to purchase. How
Mhm.
much of that rent are they going to let me use? Are they going to let me use the whole 5,000 to qualify, or only a certain percentage, meaning 70% or 80% of that particular program?
So usually the lender will allow us to use about 75% of the prospective rental income.
Okay, and if that's indeed the case, how does that? Because 75% of 5,000 is that will that be enough for someone to qualify for the property?
Yes. So, we do have a little bit of a different loan programs,
Okay.
that we can kind of work with. It doesn't necessarily have that 75% doesn't necessarily have to cover the full PITI or, a certain percentage of it. There's different programs where, it doesn't matter if it doesn't cover 50% on it, we might be able to still do the loan. There are some programs that require for the prospective rental income that we're using to cover 75. So, every scenario is a little bit different. No two scenarios are the same. So we might be okay with, covering 50% of the rent or the PITI with the prospective rental income that we're using. So it all depends on the scenario that we are running at the time.
Okay, good. I think just the overall program is good for an investor.
Mhm.
Now, let me ask you, what is the down payment and what is the requirement as far as the FICO score? What does the investor need to have so they're prepared to come in with that money and know what their score needs to be?
So usually we can go ahead and start with this program. It's a minimum FICO score of 620 and also a minimum requirement of 20% down payment.
Okay, that's not bad. 620 is definitely doable. I think hopefully I would think most of the country has a 620 FICO score. And if not, to get your score to 620, you can do that within 30 to 45 business days. And then
Mhm.
20% down. I believe the average investor knows that they have to put down 20% anyway.
Mhm.
That's covered. What would be the term of this loan? Do they have interest only? Is there a prepay? Is it 30 years? What are the parameters of this loan?
So it is a 30-year fixed loan. It does have a prepayment penalty, just depending, some people don't want to have a prepayment penalty at all. So you can always work with your loan officer to kind of, work that out so that there's no prepayment penalty. But the prepayment penalties are usually anywhere from 0 to up to 3 years.
Okay.
And
So
I'm sorry, depending on the type of or the number of years of penalty, that can affect your rate. Obviously, no prepayment penalty, your rate could be a little bit higher, versus if you get a 2 or 3 year prepayment penalty, your interest rate will be lower. So it's always, kind of comparing those things and see what fits your needs or the
I understand.
borrower's needs.
I understand. One of the questions I know people want to know, because I would ask as an investor, is there an option for me to buy out the prepayment penalty? Because generally, most investors, if they're not flipping, they want to rent the property out, but if they don't want to rent, they're going to flip it within 6 months to a year. What are the options for buying it out completely?
Yeah, definitely. I mean, buying it out, it's definitely, an option. It's just depending if that's something that you want to do and if the numbers make sense for you or the
Okay.
investor at the time.
What is the average rate of a loan like this? We know with hard money, it can go up to almost 12, 13% with your FHA conventionals. One of your fellow loan officers talked about in our meeting today that that's around 6.25, 6.125. Or this particular program, what would a rate be? I mean, every scenario is different, like you said, but what would be an average rate that one could expect?
So I would say definitely like maybe mid 8.5%
Okay.
for an investment property for this type of program. But like you mentioned, James, every scenario is different. So just because somebody got that particular rate doesn't mean that it's going to be the same for a second investor that's looking to get into this program as well.
True indeed. You're absolutely correct about that. Now, with putting down 20%, what is the timeline? Because you already know, you and I both know, and this market is picking back up. If we make an offer, what can we expect as far as closing it from the time we open escrow to close escrow?
You know what, with the DSCR program, these transactions, I feel like they move rather quickly. So, I mean, we can close that as little as 21 days, even sooner. It's just, it's all about teamwork. It depends, how fast we get everything, not only from the escrow companies, but our borrowers ourselves. So, that does make a big difference on it, because if we're waiting for something, then that delays the whole process. So it's all about teamwork. If, everybody is in and we get everything right away, definitely 21 days or less.
Okay. Well, if we use Legacy First escrow, they're going to move fast. So
Oh,
we're
yeah.
guaranteed. That's the escrow that we need. Overall, with this particular program as an investor, let the investors know what the benefits are of this program in the long term, meaning that you said it's a 30-year loan. Should they keep it for 2 years? Should they keep it for 5 years? What is the scenario as far as them keeping this loan? And what would you suggest after how much time they should refinance the loan?
You know what? I think that's just based on everybody's perspective of what they want to do with it. Some people kind of, want to keep it for the long haul. They want to keep the rate. They don't want to keep refinancing. And some people are already, before the transaction has closed, they already said, well, I'm going to refinance in a year or 2 years and stuff like that. So it just depends, on how the investor or the borrower wants to move at that time, and if they're just gonna just sit on it, let it, let the rental income pay the mortgage, they're okay with it. Or sometimes they're like, oh, you know what, I want to buy another one, so I want to refinance. So it's up to everybody. Everybody has a different
It's a case
goal
by
as far as
case.
what they want to do with the property. Yeah.
Right. Case by case situation to that particular individual and that individual's needs.
Yes, definitely.
Okay,
Yeah.
good. Now, I want to know what comes with 20 years of experience. I want people to know about Champions Mortgage. I want people to know about you, Sandra, and what you do and how they can entrust you with their loan to make sure you're going to get it done. I know that can be done, but the consumer, the people on social media, the internet, they want to know when they come to you, how is that going to work and what are you going to do to make sure that you get their transaction handled?
Yeah, well, like, as you mentioned, I have been in the business for close to about 20 years. So, like I mentioned earlier, we try to keep up with everything new. If there's any guidelines or if there's any new programs coming out, we always try to stay on top of that information, because something that we could have been able to do yesterday, we might not be able to do today. So it's
Right.
always, important for us to try to keep up on top of the guidelines or any changes that happen with any of the programs, or if there's any new programs that we see that would be a benefit to the borrower, we'll definitely try to get on top of those. And we also have, multiple lenders that we work with. So after, been in the business for a while, what loan scenario could work with a lender. So that's one of the things that I do like about Champions Mortgage. We have different lenders that we can work with, so we can, know where to submit or adjust the the loan if we needed to with a particular lender.
Okay, good. That means that you have options because you're a broker, right? You work for a brokerage, so that doesn't mean that you're just confined in a box similar
Mhm.
to a direct lender like a Chase or Bank of America or Wells Fargo or Navy Federal. If
Mhm.
that doesn't work, then you can think outside the box and look for other options.
Definitely, yes. And, being in the business for so long, we've come across scenarios that you're like, oh, okay. And so, just over time, there's always different scenarios, and you kind of, tend to learn and kind of be like, okay, well, I did a loan like this, so, we can try to go that way. So, I mean, there's so many different ways, that we can structure the loan.
Good, good. I'm very happy to hear that. It sounds like you know exactly what you're doing. I know that you know exactly what you're doing in this process. Really quickly before we go, I want to know what is generally the process as a loan officer, and a term that people always hear is a loan processor. How do those two components work together in getting a person's loan done?
So the loan officer is the person that is connecting with the borrower, getting the application, gathering all of their documents, and the loan officer initially pre-qualifies the borrower.
Okay.
They structure the file, and structure the file and work with the different lenders. The processor, we're like the middleman. We once the file is ready to be submitted to the lender, it's handover from the loan officer to the processor, and we, go through the file, we submit it to the lender, and just work with different entities or different parties, such as the escrow company, the title company. So there's different companies or parts involved in this transaction. So we work with everybody just to ensure that we have a smooth closing at the end. And yeah, the processor works the file from once it's handed off, ready to be submitted, all the way to funding or closing the file.
Okay, good. Now, if someone wants to get with you and start this process, what
Mhm.
do they need as far as documentation? Because even though there's no income documentation, there's still some things that have to be done. What's that process like?
So for this particular program, the one that we had discussed at DSCR, we would
Yes.
just need if, bank statements. I know that's one thing that we didn't mention. Depending on the type of, down payment and just overall your scenario, the lender does require anywhere from 3 to 6, sometimes up to 12 months of reserves. So I think 2 months of recent bank statements would be the number one thing. And then I think that would be pretty much it. We would take the application and just kind of go from there.
Okay, and then I'm glad you mentioned that because that lets people know that there's one more step that needs to be taken.
Yeah.
How much in reserves are they looking for? And then what can be considered reserves? I know every lender has their own definition of reserves, meaning can it be a 401k statement, a savings, a checking, life insurance? What can they show as far as reserves?
Yes. So, I mean, as far as the number of months of reserves, it's going to depend overall on the loan scenario. It could be as little as 3 and as high as 12 months. For reserves, we can definitely use checking account, a savings account, 401k accounts, a retirement account, as long as you're able to withdraw funds from it. You can
Okay.
use life insurance, the one that pays out, as the
Ah,
reserves as well.
and that's why life insurance is so important because when you
Yeah.
come to situations like this, you can use that particular policy to help fund the purchase of a property.
Yes. Yes, definitely.
Okay, that makes sense. Now, thank you so much, Sandra, for taking the time. I'm hoping my not I'm hoping, excuse me. My goal with these segments are to let the consumers know, whether it be investor, first time buyer, seasoned buyer, whatever the case may be, we want to give everyone options to help be able to purchase property, help be able to achieve the American dream, whether it be a rental, a flip, long term, short term. We want to give them options. And I thank you for taking the time to talk to the people about this particular option. And give me the name of it again. It's called the DSCR. And what does that stand for?
It's debt servicing coverage ratio.
Debt servicing coverage ratio. And not only that, please reach out to Sandra because she has an array of different programs with Champions Mortgage. She is a seasoned loan officer. She can help you with FHA conventional, any type of scenario you have, she can help you with it. And if you can't, Sandra, you'll just be honest with them and say, look, you need to get it together because you can't buy anything right now, but you at least work with them
Yes,
as they move
definitely.
forward to get through that process.
Yes, that's one of the things that we also do, kind of make a plan with the borrowers, to get them to where they need to be so they can purchase their first home.
Wonderful, wonderful. Well, thank you. Oh, before you go, your social, Sandra, how can people reach you? Your phone number, your email, are you on social media? Let the people know how to reach you.
Yes, so they can definitely reach me through Facebook. It's Sadra Rivera, and then also through Instagram, which is Loans by Sandra. And James, I would be more than happy to give you the information.
Okay, perfect. All right, well, thank you so much, Sandra, for coming on, and I look forward to working with you soon and getting something in escrow.
Thank you. Thank you for having me.
All right, have a good day.
Thanks, you too.
All right.